Hello, ladies and gentlemen. I hope you're all doing well. We welcome you back to another episode of the Black Swan Capitalist YouTube channel. My name is Versan Aljarrah, my brother Vandel, and we've got an incredible guest with us today, Mr. Francis Hunt, a true expert in micro and macroeconomics, geopolitics, and technical analysis. In my opinion, Francis Hunt is a jack of all trades with a very deep understanding of market cycles. You can catch more of his insights on Twitter and on his website. The links will be conveniently in the description below. I also want to give a quick shout out to our sponsors at ITM Trading. ITM Trading is your go-to for exploring precious metals like gold and silver that will help protect your wealth. Without further ado, let's dive into a wealth of knowledge with our guest. Welcome back, Francis.
Thanks for having me on.
Okay, so I know we were talking about quite a few things before we started recording, but let's start with the cryptocurrency space and the crypto bull run that's coming in 2024. A lot of our followers, guests, and people we speak to on Twitter and online, they have a huge interest in this because a lot of them are crypto holders and they're really looking forward to this. There's definitely a lot of opportunity here. So can we get into it? What's your overview on this coming crypto bull run, and tell us, how are you feeling about it?
There's going to be a couple of things that are going to turbocharge it this time, in my take. And one of them is the collapse of the debt markets. So in the traditional economy, I don't know how much you've been following, but we've had incredible examples of real lack of interest in the government debt markets. So the US had a deeply unsuccessful attempt at trying to get 30 years long-term debt out on their recent attempt last week. And of course, we had the British pension crisis when they tried to sell, they had to sell pensions, they had to sell debt because they weren't getting enough coupon rate, and they were short of money to pay the actual people they owed pension payments. So they had to sell the underlying asset, which is not the idea. You're supposed to hold the bond assets, and then just the interest payments are sufficient normally to serve your pensions because you've been buying them for many, many years. You've got so much, you live off the yield. They had to kill a golden goose, and nobody wanted it. And so you had the pension crisis in the UK. Now, that was some time ago. This more recent example that I was referring to was last week on the treasuries. And in actual fact, we've had a no bid on the Bank of Japan's debt market as well, which is one of the reasons why their interest rate is creeping out. And when you have a no bid, that's because nobody's bidding. And the bank ends up. It doesn't mean it collapses to zero, because if someone's a forced seller, he's going to chase the market down. So the bank quickly accumulates it. But that is a no bid of anyone else apart from the monetizing chief, the central bank head. So we are in the stage where the debt market collapses. And I know you started with a crypto question, and I've now gone and dragged you into the traditional market. But this is really, really important, because for such a huge Jupiter-sized planet, because the debt markets are truly massive, they are much larger than the summation of all the equity market caps, and literally just a bit smaller than the FX markets. And you sit in a situation where money is borrowed into existence. So as currency comes into existence, so you get a loan. Somebody's borrowed it into existence. It's usually a bank that's birthed the currency, that has this amazing license, and they've then provided as liquidity to somebody, and that's their liability to the bank. And now they have the cash as an asset to go invest and do this. So with this whole rate spike that has come at such an extreme rate, what you've actually got is you've got the interest on America's debt superseding an already over-expended defense budget. Defense budget is usually huge. It's bigger than the next 10, and their interest payments is larger than their defense payment now. And it's not going to change. And what actually happens is you've simultaneously got a dip in tax receipts, because people are actually, we had a recession. Remember, we met the criteria of a recession. They just said, it's not a recession. There's new rules. The new rules is if the labor force is strong, it's not a recession. Well, today we got an unemployment number, and the unemployment number expectation was that you would get 221,000 people on the unemployment reg. It was 218,000 last month. So you were going to have another 3,000 people. It came in at 231. So not 13,000 new people coming on in a single month. and all the others obviously staying on or being replaced at least. So you've got a net gain of 13,000 that's occurred there. So what this points out to is it puts the lie to the soft landing narratives. It puts the lie to the healthy, great economy narratives. It says you're going to have more people you're going to have to keep up, welfare, unemployment propping them up while they search for jobs, more government expenditure that goes with that, less tax earnings. So just at the worst possible time, your income statement is collapsing, your outgoings are absolutely rocketing as a government, and you've got all this short-term debt that the Treasury 2 years ago, when they had a chance to put debt out long-term at 30 years, at almost 0%, put it out on 2 years because it was slightly cheaper. So you've got all that roll debt that can't be paid, you don't have the money to pay it, that has to be re-put out. So you're recycling short-term debt that's coming back at you like a boomerang faster than you thought. A real drop ball by the Treasury, not getting much more of it, kicking the can further down the road. You've got terrible income dropping, which means ever more debt. So you're in a situation where they spend virtually twice what they get in already. This was 52% income and about 48. That was a few years ago. Now I think I'm almost certain it's probably almost the other way around, but I don't have the numbers to hand. So you're adding new debt just by always expending. A lot of that expenditure is already pre-committed to. The actual discretional expenditure any one president actually has is exceedingly low. And then there's events. Oh, we must send money to Israel. You know, there's this war. You know, suddenly we are obligated to be the money funnel for this event. Oh, and the Ukraine up until now, who's now finding that it's second tier. Upper Israel is second tier to the original version. So we're getting a lot of this geopolitics that gets dumped. So a lot of the discretionary expenditure gets soaked up. So this is going back to crypto, bringing this back to crypto. This is the acceleration of the capitulation of one of the biggest asset classes. And what that means is, where does that money rush to? It's the big short is the debt. But the thing is, you never get in an economic system something that's collapsing without something else going up disproportionately. And the new money system is the digital money. It is what will come both through central banking digital currencies, crypto as we have it already, many of the tokens that are already around, of which we will discuss XRP, certainly very well ingratiated. All the statist tokens are going to fly. Why? Because they're co-opted, they're corrupt, and they're embedded with the politicians. They've already started working with them, and you're going to have a debt collapse. So you need a new system. And the new system is the white pony has been jogging alongside the dying donkey for everyone to cross over. And it's quite clear who benefits. And it's going to be the digital money space and cryptocurrency.
Right.
Yeah.
Well, there's no doubt that there's multitude of challenges. And the interesting thing that you said was it's all interconnected. And if you look at the real economic data and the real global economy, everything is in bear market territory, no matter how much they try to disguise it. It seems that the only driver right now at the moment for the markets is the conflict in the Middle East, which has already injected, what, 782 billion into the stock market yesterday. Massive sums of shadow money into stocks and even cryptos. It's interesting because consumers are drowning in debt. And that's why the question persists. Are we witnessing the dawn of a bull cycle, or is this surge in markets really just another bear market rally?
Well, the problem and the concern I have for the man in the street is that this could be the biggest bull market that they don't get to participate on any meaningful scale on, because they can't afford it. They don't have the stake size. They're having to make a rent check. And this is how, remember, so if the grand design is the hollowing out of the middle, the lower middle, the middle, and the middle upper classes to the super elite, and we've spoken countless times, one of my most popular videos is a 2017 video about the polarization. In other words, there's going to be absolute extremities. There's going to be the serfdom, and there's going to be the absolute ruling classes. And there's a massive hollowing out of the middle. And, you know, there'll be little strands of middle left where once there was a fat, juicy middle class. And the game that goes associated with that is you don't want anybody to make money if you're trying to hollow them out. So you first inflict immense economic hardship on them so that the necessary bull market that has to happen sees minimal participation by individuals, and the corporatocracy is the primary participants and the originators of the token. So the extreme worldly wealthy, the trillionaires of this world, are not going to allow themselves just to be broken down to 10 million because the debt markets are collapsing and they hold all the debt. They have seeded the new system, and they are the big holders in the new system, and they're going to inflate that as they deflate that. So it'll be directly proportional, and they will be absolutely maintaining and expanding their wealth. And we're going to have a bigger hollowing out of the middle and serfdom as the result. And that's the problem most people facing this crypto bull market will have, is they won't have enough skin in the game. They haven't been making enough cash. They've had spiking interest rates crush them. 21, there's over $1 trillion at an average of 21% in credit card debt in the States. And it's not that different in other nation states. It's probably a bit extreme. You've got subprime cars. They've been offered all the seductions for play now, pay later. And it is truly the marshmallow test. Eat your one marshmallow today and you're done. Put it off and you get 2, 3, 4, 5, 6 tomorrow. And this truly is the patience of the marshmallow test. And I've warned, debt is the nanothermide of your personal finances in terms of destruction. And the spike in interest rates that we think will come will actually level everybody, and they will be forced sellers of their crypto, and corporations, SMEs, and high net worth and home offices for the extreme wealthy will be gobbling it up. And that's my big fear. It's bull market that the least people will have the means to participate in.
And that's the thing. I agree with you, Francis. You're 100% correct. Now, the elites, the bankers, the financiers, the venture capitalists, they are already positioned and big key holders in these new assets, like digital assets and crypto. They're already being positioned to ride
For the run.
The run. Exactly. They always get in early. That's the key. And here's an interesting fact I found, you guys. So as of 2023, an estimated global crypto ownership rates are at an average of 4.2%. So what that means is basically 94.68% of the world's population does not own cryptocurrency or digital assets. So we are literally such a small percentage of people in the space. And it's just insane how early we are. And I think the elites...
they aren't done trying to squeeze you out, Vandel. There's a real warning in this. You've got to stay in the game. I don't talk about leverage. It's much more important you stay in this game. The move will make you rich.
Exactly.
Don't be shaken out. You'll be offered leverage. It's like being offered a credit card with a low teaser rate. You have to be seriously careful about what you're doing, because there will be volatility. You could actually have this entire pump with a demand destroying event. Don't forget the run up. We got a bit of a precursor on Bitcoin. Remember Bitcoin at 10K, we called the 14K, that was a half run. We said that's done. It's going to come off. You went from 14K. They threw the demand destroying event that was March 2020, which I won't say the name of. And you had a capitulation down to 4K. And most got, imagine how many people got cleaned out. I remember how that was chucking down. I was shocked. I was watching it and I was going, wow. And we were calling for a major upside macro HVF. It bounced back up, it formed, and it broke. But before, there's a major shakeout. They don't want you, Vandel, in that bull market. They don't want Versan in it, and the community watching this, they don't want you in it. They want it solely to be them. They are in the business of stripping you of your wealth to maximize their own. They want all the chips in the casino. They want you with none. The game for you is that to recognize there is actually a war being fought against you building wealth, and the game is to stay in the game. And you, without real good training and very moderate, you should avoid leverage. And you should be staying in the game. The move will make you the money. We have a really tight method and very tight stops. And even still, you can get your stops jumped. You can have bigger losses than necessary. So we always trade small size. And right now, there's not much we're doing of a leverage nature at all. We invested and we're waiting.
Yeah, no, I agree with you, Francis. People have to be extremely cautious and careful, and be very strategical with how you invest and what you invest. My question on what you just said, Francis. So do you think we're going to have a small crash or correction before the Bitcoin halving bull run, before the bull run really starts to take off? Because we have from now until April before the official Bitcoin halving. So we have a couple of months still, and things are looking nice on the charts so far, right? And everything is green candles pretty much for the past several days. Do you think this is some flake out, or are we going to crash before we really take off? Like one
If you
last
apply
squeeze?
my suspicious rule of how they play, as I've just said, and you look at the previous cycle, in both instances, I would say there is to be one. On both those narratives, there would be. And that was why we were a little bit jumpy at Bitcoin. And some people, will rightfully say, well, you were wrong and you took stick. We didn't like the structure where it was at one point looking like it could be a head and shoulder. We feel that there's another shake of the tree before we go. I think we're very close to wanting to go. And 2024, in my opinion, is going to be a very good year potentially for crypto and hopefully also for precious metals, by the way. But crypto needs to be designed to steal the precious metals money, because they don't want lots of delocalized little guys with private stashes that essentially make you your own central bank at hyper valuations once they, maybe make gold $25,000 or whatever the currency will be in a year or two's time, and silver $1,500. They've done that before. They've just re-rated the value of it. And China is certainly buying like gangbusters precious metals as well, and dumping treasuries, or certainly to some degree their treasury portfolio is shrinking because of the loss of value in debt and not buying any more at minimum. Kissinger said the wealth moves with the gold and it's going east. So you do need to think about PMs as a support with your crypto. Don't just be monotheic, because digital is great when there's power, it's great when there's mobile network, it's great when there's internet. So have a mix of both. I've often spoken about, a stable of horses rather than just the one fastest racehorse. Crypto, by volatility and means, could possibly be the most fastest of them in terms of upside. But the problem is it'll be volatile and skittish. For your everyday work, you need one of those cold-blooded horses, those Shire horses, the ones with the hooves and the hair that you just flog and they pull all day, because that gives you certainty of something that'll work. You just have to get him out, warm him up a bit and get him jacked and he'll plug on. The racehorses are actually high maintenance and they're high volatility. And in the same way, have a stable of horses, don't just have one. And I kind of wince when I hear, this Carl Moon guy or these other guys say, I'm 99% all in crypto, and all of it's like it's like a machismo statement of your commitment, how hardcore you are and how mentality you are. And I'm like, you know what, make a little less money maybe, and have those workhorses, because that'll keep you going when there's a 30% drawdown on the fast horses. So it's much more about what you sustainably can survive in volatility, and you're not as tough as you think you are, because we could have another demand destroying event macroeconomically in the main economy. There's every reason for an absolute bed crapping moment. And don't forget, we have money I still have dollars in the banking system and other currencies. I think the temptation to clear bank accounts and then to force people into a substitute money is incredibly high. And then to have a lengthy pause in between the time. Oh, this has just happened. It's a black swan event. Russia hacked all the banks. Oh, the SWIFT system. Everyone 6 months with no money until you're begging for any solution that you'll sign on to anything, and then they put what they want in front of you. Well, guess what? That's not a groovy environment for punting crypto. When you can't make your rent check, there's not any real. People have looted the stores, etc., etc. So real geopolitical distraction is going to be another thing. People are going to be so affected by distraction. We were talking about how few people really understand the real mechanisms of the Zionist principle and code of where they want to take us. And they're not playing with your interests in mind. This is a war against you. They need you serf. They need you ward of state. They need to distract you. They need to mess around. They need to steal your money in their banking cartel system. They need to do everything, and they need to inflate a bubble for them to retain their wealth. that has to have some market price, so it has to trade openly somewhere with the least amount of you in it.
Yeah.
That's the game.
And they understand there's this transition taking place, so they want to have full control of the end game. And that's why they're positioning themselves and setting up all these shitty environments so that they could capitalize on it and still have control at the end of the day.
Yes.
100%.
Yeah.
And it's their capitalization at your expense.
Absolutely.
The goal is you don't capitalize. You watch it all happen. It's like, NVIDIA. They knew they would pump this thing to the sky,
Yeah.
or whether it's legit or not. But how many of us are sitting, have owned NVIDIA shares from the beginning? It's something I just never participated in. Some people might have them in an ETF, but the goal is it's not one they want you to participate in, but it has to happen. And they need to distract you and cause you so much pain in old world that you're too busy reeling from the suffrage and meeting your living costs and your debt rates. How do you do that? Interest rates spike. What people don't understand, and then many people will look at debt. Why will interest rates spike? You're busy telling me that the unemployment is up and the economy is worse than it is. Why would rates go up? Well, It's got nothing to do with the Fed wanting to put the rates up. What it's got to do with super high amounts of ridiculous volumes of debt no longer being willingly bought. So what actually happens is you have that seesaw, that's my arm, and the fulcrum somewhere here. The one goes up, the other goes down. So the valuation of debt goes down on my elbow side, the rates spike. That's what happens. So in short, it's not something the Fed will control. The Bank of England made a number of rates of up increases in their debt markets in a day once when George Soros was attacking it. They didn't think, oh, we've changed our mind, let's do it again. No, the market was dumping their debt. The pound was collapsing. And as long as that's happening, you're forced to raise rates in an emergence. And if you just stand back and say, oh, I'll never mind, well, your pound will go lose 40% and it'll stay down there. And everybody will be screaming at you and demanding political heads, and your bond market will be dumped and no one will be buying it. And your pension corporations will be phoning the Bank of England and saying, we can't meet our commitments. The pensions have failed. So guess what? You do everything in your strength to prevent that. So the way you prevent the attack is you're forced to raise interest rates because they borrow your currency to short it. So at least make it more expensive and then make it more attractive for people to actually hold your currency. It's losing a ton of value. Well, if you're paying a very big interest rate, some people might see it out. If you're not doing anything, it's just about not competing. It's like you're selling pink Crocs for $250 and the guy next door is selling them for a tenner. Well, you go out of business. You cease to exist. You got to cut, you got to cut, and you got to cut. And your rates have got to go higher and higher and higher. And that's what happens. So you get forced into it. And Britain was forced into it for an attack on the pound when they went in too high to the Deutsche Mark, which was all a planned thing. It was part of making George Soros as wealthy as he could, so he could fund his Zio agenda that he has across all over the place. But nonetheless, it was a microcosm. Now we've synchronized everybody to be Britain. Hyper overvalued debt and currency. Well, who do you fall relative to if all the currencies are garbage? Well, the debt market fails. That's your problem. So nobody wants to buy debt. So all the currencies collapse. They might not collapse in exactly the same order. The ones that are most indebted will go first. So that's why we've seen an absolute fall in the yen. I mean, I was watching the beginning of this year, Druckenmiller and everybody, and we've been saying for 2.5 years, the yen, short yen debt, the yen collapse. They were doing yield curve control. They were saying, oh, we don't know what the trades are. We can't see anything. And it's not like I'm smarter. I just don't think he wanted to tell you. Yeah, I'm sure he knows much more than me on every level. And we could see things. It's the worst. It doesn't have the unique privilege. So that is what's happening. Now they're having to let their interest rates creep up, and still their currency will fall until they're matching all the other currencies, because we all lepers, and we've all kissed the king leper to join the leper colony. And now, we all got to be equally sick. And you can't have one at 1% and someone else is paying 5.5. Well, guess what? We dump all the yen, we borrow all the yen we can. It's an easy, cheap rate. We go buy dollars and deposit it at 5.5%, and we pay less than 1% on yen, and the currency crashes. So we make appreciation, we make yield, we make free money. There's no free money forever. So that's what happens. You have the currency crash. And this is what's going on. There's so much imbalances now, and that's going to be a big driver for crypto, without a doubt. But you've got to be in the game, and you've got to stay in the game.
So
Yeah, you have to be liquid also. And I think that's why many people are going to miss out. It's because they're buried up in debt. They don't have liquidity on them. But it's also interesting how you said that debt is really what's going to keep this market driving at the moment. And that's what we see in the Middle East. It's the war that has given the institutions to prop up the markets. And that's, I think, what we've been seeing these last few weeks. Ever since the war started, the markets are going up. So we're profiting on the expense of lives overseas. And what they're trying to do is hold this shit show together until the very last moment. And again, the system was always designed to fail. The question was when.
Ukraine, the whole thing was a money laundering game,
Yes.
and it's a banking cartel enrichment. We're at the end of empire, and everyone's stripping the fittings off the house, the palace, the grand palace. The insiders are, and stripping it off and selling it. So it's a lost. These crimes are going to get lost in a new system that's going to be launched. They're all doing a major crime. What was happening is we were tapering on Ukraine. People had Ukraine fatigue, and isn't it interesting how the Israel narrative came in with this fresh, new, super hot narrative? They really have to hammer it, because essentially America is giving up wealth in debt, and the Ukraine narrative was running soft. So you got this new, hotter, new super source why you should be giving money somewhere else to be laundered, stolen, misappropriated in a variety of ways. And I would add that to the war narrative and what was going when you touched on the geopolitics there.
I do want to talk a little bit about the Bitcoin. I know that the Bitcoin halving plays a very big role in the next bull cycle. But what I want to know is, what catalyst is it going to take to get Bitcoin to decouple from other blockchain protocols that are addressing real world solutions, real world problems? Because we look at what the institutions are saying publicly, they offer very conflicting views. One is accusing Bitcoin as a threat while quietly embracing other technologies and adopting them as well, like XRP, XLM, XDC, etc. And then we have something like BlackRock. They went from accusing Bitcoin for a money laundering operation, then they did a 180, and now they want to consider a Bitcoin ETF. So this just raises so many questions about the true nature of these discussions that are happening. And I just want to know what your thoughts are of the underlying agenda, I guess, that's driving this shift.
So the previous accusers of Bitcoin as money laundering and various other things, this is how they use insiders to taper the rate of growth of crypto. So they have like staged capitulation. It's like the truth on the event that we may not discuss. It was originally 99% effective, then it was 75, then it was 55. They slowly leak the truth until you realize it's a complete klutz, misnomer. Bullshit. And in the same way in Bitcoin, it's clearly was, for me, a dark state operative setup for the digital thing. We can't, there is no Satoshi Nakamoto, there's no Santa Claus. Never believed that for 1 minute.
Exactly.
For all the tea in China, that there's this benevolent guy who created all of this stuff, disappeared into the ether, can't be found, can't be traced. It's just a guru. It's like we created baby Jesus all over again. Only he's money Jesus, and all the adults are meant to buy this. I mean, I've just seen too many psyops. I'm too aware on this. I'm not buying it for a moment. So it's an absolute creation. There was the 96 document. Anyway, there's enough evidence. We don't have to drill down on it.
Exactly.
So the whole point that BlackRock, who is actually the financial new world order, in essence, it's the financial arm, one of the biggest arms, also controlled by the City of London and all investors, owns most of the banks by large dominant shares, State Street, all of them. All these various brands are essentially controlled by a handful of families. So the fact that they were just slowly coming around, and they said, okay, now we need to give this a bit more emphasis. It's been in a long bear market. We're rethinking our stance on this. It's the same as the Fed. The central bankers jaw markets and they say certain things. Often it's deception. Sometimes they may even choose to say the truth if it helps, if it supports what they're wanting to do. So, but it was misinformation. It was like the temporary inflation story, the transitional and all of this. So this is all just about leaking the truth and conceding the truth slowly. So that is a news management issue. It's a propaganda management issue that BlackRock once defiled it and then later, has come around to it. They want you to see it's almost
just
like
misdirection.
Yeah, it's misdirection, but they're going to get there, but they want to do it in their own pace, and they want you not to think that it was one of their constructions. So it's like giving birth to your own son and disowning it for a whole bunch of years, and then finally acknowledging, when he turns 21, that he was always your boy, and that you birthed him. So it's absolutely propaganda, and I treat it as contempt. It's quite clear what's going on. So with that then said, and this being a fulcrum part of their strategy, that they're going into ETFs, I would not expect that they would go into an ETF on something that would later be bankrupt and cast away.
Yes.
It's possible, but I would not expect that. So I would say Bitcoin probably does serve as digital gold, literally the soundbite that you were given, because it's not transactional, it's not fast. It is totally transparent, which is exactly what they want in a financial surveillance system. Remember, the biggest casualty is going to be privacy, your freedom and privacy. And with it, freedom of movement, you're going to get a G20 approved health pass that will confirm that you've had every shot under the sun before you can travel. It'll all be biometric. It'll all be in the grid, and you're going to have NFTs for every bicycle you buy, right down to a pair of shoes even. So I mean, they are digitizing the world, because it is, and I want to highlight this, digitization of everything with tokenization is the same as the derivative markets to gold. It is a proxy. Right. It's a proxy instrument that is designed to control the actual instrument. Yep. You truly have to perceive this for what it is. Derivatives were designed to, they're the big market. It's upside down pyramid, that they're the tail that wags the dog. And in the exact same way, without actually even having to engage the underlying actual market, you can push it around. And in the same way, you can sweep by, control the world, buy up all the tokens for a whole region of houses where they've all had their paperwork all put in a token and a file, because this is what they're going to do. They're going to make you value your own homes to pay property tax. And if you undervalue it, it can be forced into an immediate sale. Ethereum is part and parcel of the planning of having online conveyancing into a tokenized voucher with an NFT for your home. I will buy the NFT for your home. I will have taken you out of it. You will then owe me rent from that point on.
Same
and
concept.
If I happen to be one of the bankers that have unlimited of these tokens, guess what? I can buy everybody else's homes. I just print them up. And you will have to have changed your dollars in to get them, and you're not trillionaires either. And you don't own the system. You're not powerful. That's how you turn everything into your something you own. And you don't even have to go out there and see it. You can just buy it online. And everybody can then confirm it's owned by BlackRock. Because they own the NFT. So you've got to resist digitization. This is the converse dichotomy of crypto. Be in it to make the money, recognize it is there to imprison you and surveil you. So you've got to, in your practical sense, resist everything about it and be as physical as everything, and at the same time build your wealth by participating in the appreciation thereof. So let you unpack that.
No, you're right. Now I believe, this is my personal belief, that NFTs were introduced as art. It seems very intriguing. It's disguised as that, okay? But the long-term goal...
Can I interrupt you?
The long-term...
sorry, Vandal. I'm being a real pig and I'm interrupting all over the place. But I've got to just throw the soundbite because it belongs right in, as you said, art. Art in the real world is literally money laundering.
I know.
It's a CIA psyop, and it's
Trust
money
me,
laundering.
I know.
Ukraine flag with the blue and the yellow. And I mean, my partner used to work in the art galleries and all of this. So NFTs as digitized art, I mean, I've got to piss myself laughing, seriously. I mean, and on that, I agree with Richard Hart about it being a PDF.
Yeah, well, the thing is, that's absolutely true, 100%. Now, the thing I believe in is that the NFTs are just introduced as art and to intrigue the youth and the younger generation about this idea of uniqueness. But the long-term goal for NFTs is for full control and data and information tracking. That is the goal. But they had to introduce it in an effective way.
Yeah. Okay. Yeah. It's like a kiddie's Tamagotchi toy, only digitized, and then suddenly it finds this use. And hey,
I know what they're doing. Okay.
Yeah.
So yeah, they were pretty clever with how they did it, how they started it. But
everybody underestimates the enemy they are facing. These guys are far smarter than any of us.
absolutely.
I've already concluded that I'm going to be losing 9/10 of these battles. But if I can actually come out with a 10th, I will still, relative to everybody else, be significantly wealthier. Because the truth is they've thought of much more than people realize. And they made it cool and tempting. And, you know, Raoul Powell has a chimp, or which is what is it called? The monkey club or whatever, the thing like this. And if you don't, you're not cool. And they've even created, you know, pressure. My picture has stayed the same. No laser eyes, no chimps, no flipping seaboard apes or whatever we're talking about here.
Yeah,
because it is all this, they even create the fashion, everything in terms of cycle. And if you look at all the fashion modules, Canada's, Nygaard, you've got to look at Lex with Epstein, all of these, in terms of all these fashion things. I mean, they are absolute, it's part of the network for picking up females for parties, younger, underage. It's all part of it. Unfortunately, there's so many tentacles of crime network that serve multiple roles that people don't see the almost genius of this corruption and this co-opted macro system. I mean, it's phenomenal creation for very dark purpose, but it is in everything. It is in everything.
The art of deception and tradecraft at its finest, really. Yeah, most people have a very difficult time comprehending this topic, but it's true. It's so true. We really need to set up a whole studio in one of these major cities and start really getting into this meat and potato stuff, because I believe there's an audience around the whole world that really wants to get more information on all these topics. We can't do it here on YouTube, but eventually we do have some plans to set up something like that, and we'll share more about that in the future to everybody.
Let's show something positive, because we're scaring everybody and they've all go, oh my God, this guy's a nihilist, black pill.
You know,
I'm loving life, and you should. I just went and had an amazing walk. I'm in an amazing area. I'm looking at some physical assets that I can live and enjoy. But let's show something positive that's gone on in the markets, silver and gold, which I think some of your people will still enjoy. Let me see. Have we got definitely the share button here? Invite, chat, share screen. There
and you got the XRP chart, right? We can look at that.
I'm going to definitely take a turn past that. I know we've got the XRP army that's waiting to hear. A little bit of interesting. I'm doing the newsletter literally on this right now, but we had this is silver 4 hour. I should actually go from the big time frames back down. Let's do it the other way around. This is weekly on silver.
Okay.
So everyone goes, what happened to your $3 grand gold call, or your 2.9 gold call, and your $45 silver? It's still sitting here, and it's still happening, and it's still coming. This is the continuation we expect. That will take you to the gateway of 45.50. It's part of a very macro flag. Let me just put some arrows and draw some lines on here. That was the March 2020 low. So as big as you overreact to the downside, so you typically have a natural geometry to the upside. So we are expecting a move to the 45 coming out of this. This is the low. That's why it's projected here. And since then, we've been coming up against this red line. We'll drop into the lower time frames. But this you can treat as a flag. It's got a little bit of a broaden on it. So some might say a megaphone. But treat it as a flag continuation for simplicity's sakes, without me getting too technical on the technical analysis side. And then if we drop down to the daily, let's show you how it looks there. So on the daily, we've got this move up, and there's also some flagging here. You can see that, and this was the up leg. Let's just get that black thing out the way. There we go. So we come up to, and we bounced on this capping descending grind line, which when run will point to a triggering of a daily flag. So that's pretty positive, because you're now on the border. Right. You're on the border. Am I breaking the border here? Am I going to cut and run? And previously you'd been rejected both there. There was actually a couple of times there. And then we even said that there's going to be a sell-off in silver during this period, and that happened. But then you got a beautiful snapback rally. So we've looked at the weekly, we looked at the daily. Now I'm going to take you one more time frame to the 4-hourly where we were starting. And you can see the 3 flags for silver. So on the 4-hour, there you are at the bottom of that other bigger flag. You can see this line here. And there you are coming across the top of it, but you've got another flag. And what often happens with a flag, you get these technical little tests to the downside, and you popped out the bottom, and then you pumped right across it and out the other side. And this is the technical example, funny enough, of what we were just saying about stay in crypto. Don't get thrown out.
Yeah, stay in the game.
Because the game's design of the game is to shake you out. It often moves in the unexpected direction, hurts you if you're early, only to throw you out, only to do exactly what you think you do. Don't get shaken out. And for those that really care, that's a 4-hour. So this is now a triggered flag at this point over here. But interestingly, in all of that, so this is a real educational one, I suppose, on technical flags. If you drop down a little bit more, I'll just take it to the 1-hour here. Whoops, let's change to the 1-hour. I got to get out of the overlay jaw and pull it through. What you might notice is that even within that, in this 4-hour flag, you first got a 1-hour flag to the downside, and that gave you your little test to the downside. So it warned you, got resisted there, came all the way down, congested there, bang. And then it hit, you wait for it. The key round number, $22. Bang, that was already a key level of significance. We'd had that on the chart a long way. See it jump back onto this level, then it pauses for a while at this level, then it pumps right across the flag, and then it pauses at that level again. It's almost textbook. Almost textbook. So we've shown you a 1-hour flag, a 4-hour flag, a daily flag, and a weekly flag. And we are getting to that point now where we are triggering the daily flag. And of course, you're going to get a bit of a resistance and a little bit of pullback. A lot of late guys running in, but I expect we're going to break to the upside. Very positive for silver. And you'll also note the silver gold ratio is finally turning back down as well. So there was a real sell-off in the silver gold ratio here. And that's positive for metals. You have that grind line, that basing ascending grind line, bit of a squeeze there, which we'd call a rising wedge because of the pinch, and bang. That was your sellout around 86.7. You went as low as 82. So that's a good move. And on the bigger time frame, seeing as we're doing multiple time, now that's on a 1-hour. Remember this guy. We want it to come down and break this dotted line. We're waiting for this big event, and it keeps coming up, this bagel. So it keeps coming up under this. So there is a moment of truth that has to happen. And this was not that strong. So when this breaks, this will be a key triggering event all the way down to 65 for us. It'll be disorderly and fast. And I would imagine debt and FX related issues, maybe bank. It'll be very much around debt and banks, I would imagine.
I think really, and I've told this to so many of our audience, in a digital age, the importance of physical assets like gold and silver is evident, and it's vital. These are tools that provide tangible, secure form of wealth, and they also counter the vulnerabilities of digital assets to cyber threats and market fluctuations, etc. At the end of the day, these are physical assets that you need to own, especially in these uncertain times. Another thing is people need to be asking themselves the question, why are central banks buying gold at record highs during rising interest rate scenario? Because when rising interest rates there, historically, they'll be selling. And I think this is because of what we've been talking about, the two-tier financial system that is being set up to return us to some sort of neo-feudal system model with a focus on commodities that's going to be powered by blockchain-based solutions. Just wanted to put that out there.
Yeah, I think that's a great point. And the part of that are bringing it in are the BRICS as well, the ones that want to move away from the dollar. So I think China will stun everybody with the true amount of gold that they actually have when there is an announcement. I think it will be because I can tell you that even I've just finished riding motorcycles in the dirt in Zimbabwe. There's subsistence mining going on there, and it all goes into a black market. It goes via Dubai and it goes bang to China.
That's
literally
super fun, by the way. I ride motorcycles too, so
nice. Yeah, you're good. I wouldn't say I'm particularly good. I went with Tom Bodrovics, who was very good, Palisades Radio. and it was great fun, and he had a good time. But yeah, it's a great way to travel and see something different and see the world. And there was some beautiful countryside. But anyway, the lesson being, and on another point, which will also possibly point that we get this interest rate spike, and you actually may have a dollar surge, which will hide how well Bitcoin initially, or mask somewhat how well Bitcoin and gold and silver are doing, is the fact that other nation states are short of dollars. So in Zimbabwe, when we were paying for things, they said, please just give us dollars cash. Don't send us any electronic dollar money, or pay us in rands or Zim dollars. And the answer to why that is that any deposit of US dollars in their bank account, business, personal, anything, the government in Zimbabwe automatically takes 25% of it away. Automatically. It's like a tax. It's like, we need it. We need dollar reserves. If you've earned dollars, a quarter is ours. That's it. Gone. And that doesn't mean you know, it's like, I don't even know where that leaves you on your taxation. I mean, imagine you bought a bunch of goods and you got like 5% margin. You just get given a massive haircut and you have a huge loss. But they will know that now, and that's what it is. And I imagine that there's a lot of other nations that are similarly getting to a point where they may consider being equally aggressive. So what possibly happens is, as the debts start to devalue across the world, the Fed is going to choose to be one of the most aggressive on the rate side to try keep their market stronger. And what you'll end up having is interest rates will be forced up, as no one's buying T-bills, and they won't be able to monetize everything because they're monetizing at such a rate. Their debt expansion is so big, and they've got to pay interest on that new monetization. So it's reached a point where it's self-feeding and it's parabolic. So you're in such a failure point that they've got to stay out front and not be the weakest one. And being the dollar, they'll be the strongest one. With those rate spikes, everyone will sell their currencies and try have dollar deposits or get some of that yield that will go with it. And the Forex, the emerging nations that have dollar-denominated debt will immediately go into system failure because they won't then be able to make the interest payments because A, they're not earning enough dollars, and B, the interest is getting disproportionately more expensive on a spike. It doesn't have to spike for long. Things will all fall apart. It's just the final club on the head for the old system. And what that will do, it might even mask how well gold is doing, because gold will absolutely surge, but the dollars surge 30% against every other currency. So when the others fail, they fail there will be a rush into dollars, not just dollars, also crypto, gold, silver, etc. But in terms of the paper, the biggest beneficiary at a paper level will be the dollar. So that could lead to Brent Johnson's milkshake theory actually turning out correct. And you'll have a spike. But you don't want to hold those dollars for too long, because the new system comes in and then it gets switched and a lot of things start to break. And longer term, I think America has a much harder journey after it's no longer the world currency markets staple, as Britain had after its period. So you'll enjoy the spike, but you won't enjoy what comes thereafter. And don't forget, most of them are the most indebted. The country that is the most consumer orientated with the most debt is America. So the fact that your currency is appreciated won't be helping you when your car's being repoed, your house is being repoed, and everything is like that. Great, I've got a strong currency, and all the stuff I owned has been taken back off me. So this is why I keep warning people. Debt is the controlled demolition of your personal finances, and the interest rates will be the lighting of the match.
Speaking of debt and interest rates, I just wanted to highlight something on the Bitcoin halving and the bull run that we see every 4 years. And I want to get your opinion on this. I know we touched on it briefly earlier, but this is for the audience to hear. So the Bitcoin halving, the bull run that we see, typically happens every 4 years. It's on this 4-year cycle. Now, there's plenty of evidence to support this claim that the key catalysts for the 4-year Bitcoin halving bull runs go back to the macroeconomics, because the macroeconomic factors are really what drive the bull run. Because since 2009, the economies, all governments reset interest rates, they lowered them, the Federal Reserve, the central banks, to nearly 0% in 2009. And the economy's debt pretty much has to get paid and refinanced every 3 to 4 to 5 years on average. So that's like a 4-year cycle. Now, the government's 4-year cycle of monetary stimulus and subsequent tightening perfectly aligns with the 4-year Bitcoin halving cycles. So
Very
And that's by
basically,
design.
by
Yeah, you're
design,
absolutely right.
there's no coincidence there. It's definitely
Yeah.
by design, right, Francis?
100%. We've already commented a lot on this on our Crypto Sniper channel. That's you can see it when you do the Dixie, the dollar index versus the Bitcoin chart, because that is essentially the dollar strength. And when there's printing, and people forget that the surge from the 10K to the 64K all came during the quantitative
Stimulus.
easing era. Yeah, the major
Yeah.
stimulus and the crash in the dollar. We did have a correction on the Dixie more recently, which wasn't accompanied by immense strength on Bitcoin, but it's not in that 4-year cycle. You always get a big setup. So they've actually synchronized us with crises that lead to Bitcoin. And I will go back to the point I was making earlier. By creating the crisis, they reduce your wealth and put you in economic poverty for that moment. And then your business is closed, you've lost your job, etc., etc. Crisis, you shut down, you lock down, you can't open your restaurant, etc. And then the stimulus takes you over. So by the time the run comes, you've first been shaken out to the downside, just like I was showing on the bear flag as well. Again, because I think it serves so many purposes. These people are really clever. It serves multiple purposes across all levels. They keep you out because you're wrecked. They wreck the thing first. And you asked the question, Francis, are you expecting another demand destroying event prior to the major part of the next bull market? And my answer was largely yes. In other words, you've got to stay in the game because they force a liquidity. You get forced sellers and they let it happen to crash it. They don't come in and buy. They are controlled. And then they put the bids on at the low levels, and they let the prices are determined at the margin by the most motivated. And if you get a lot of people under great duress, can't make a rent check, can't pay, interest rates have spiked, they can't pay their credit cards, the wife isn't interested what their Bitcoin portfolio is worth. They want to say, where's the food on the table, husband? And vice versa. And obviously that causes an absolute forced seller. So you need to create a blood in the street forced seller environment. That means they're going to impoverish you first so that you don't get to participate to the fullest degree, and then you end up chasing FOMOing near the top. And they do. And they get to buy all your assets at the bottom, the physical assets in the crisis demand destroying event first. They pick those up at the bottom. And then they cheapen crypto. You sell out of your crypto because you have to. You got to pay a bill. And then they come with a solution, and then it pumps. So you have to survive the shakeout. There's always a shakeout. If you're looking for a title for this movie, my big warning is survive the shakeout to make sure you maximize the bull. Because it's designed to make sure that few people get to make the real big bucks.
On that catalyst and the macroeconomics, how it aligns perfectly by design with the Bitcoin halving. Interestingly, Versan had a conversation with Simon Hunt, a friend of ours, global consultant for the gold and precious metals based out of Dubai. And Simon Hunt was saying he could see the Fed lowering interest rates in April. And this, he doesn't know too much about the Bitcoin halving and all that, but he said in April. And it's so interesting because based on his analysis, not knowing much about Bitcoin, he said they could lower interest rates in April. April is the exact date of the Bitcoin halving beginning. So a lowering of interest rates
all lines up.
And then stimulus, injecting more capital into the system and lowering interest rates, and then the Bitcoin
that would be lighting relighting the fuse of that rocket, won't it?
Yes. So it's interesting if it plays out like that, and I truly believe it will. But I do want to get your opinion on this. What are going to be the biggest reasons for the bull run besides the macroeconomics? I mean, we got utility coming into the play. We got everybody and their grandmother talking about crypto. I mean, more adoption, mainstream.
I think that this is going to be the reset. I think this is the one. This is the one that they've been playing for. I don't think we have a normal economy going forward. I think a whole sweeping. So we've had the fourth one is the one. We've had 3 drills of cycle with economic crises. I mean, how do you get bigger economically than shutting the world's SMEs down and advertising on the news that Amazon is the main retailer and is doing all these amazing things to make sure that no viruses are transported? In other words, buy from our Rockefeller New World Order store that we funded for 15 years without any profits for ages, so that could become the dominant player in retail, so that we get all your money. It's a bit like the oil rigs where you had, the Rockefellers gave tokens. They didn't even give dollars to workers, and then they had to spend the tokens in the Rockefeller store, so that they actually never gave the people any money. That's how psychopathic they were in their approach. So inherently, you're dealing with Amazon as the retail New World Order store. This guy's Zio all the way through, and the Washington Post investments and all of this stuff. Same with Elon. But anyway, without getting too resetty on that, your question is in essence saying, asking, in fact, sorry, forgive me, I went on such a tangent, I almost forgot the thread of it.
Yeah, no, you're going on the right path. But basically I was saying, it looks like this massive bull run, besides the macroeconomics aligning with it, we're going to have a few factors that we never had in previous bull runs. One,
and there was the reset. Thank you.
Adoption.
I lost my thread.
Yeah, more adoption. This time we actually have real utility. These assets are actually being used on a financial, institutional scale. Maybe more global adoption from your average Joe participating. Debasement of currency. Like, people are really looking for an out, an outer, a different way to protect their wealth.
And I've got my thought back. It's essentially the difference with this one is all the participation was entirely optional in the first 3. Okay. This one is not going to be optional. It's going to be compulsory. That doesn't mean grannies are going to be buying the Bitcoin bull market flippening. That's not what I'm saying. I'm saying what comes out of this next spell of 4 years is inherently a totally different financial system. And there'll be a lot of people that'll have to educate it. You're going to get custody solutions. You're going to get the NFTs, the whole tokenization. There's going to be a swathe of solutions that are going to come out. It's going to look like .com. Do you suddenly remember? I'm hoping you guys were old enough to remember .com as I did. But there was just suddenly all these business plans and all these different businesses. You had Cisco, you had Google, you had Microsoft, was almost the old world one. You had this swathe of all these businesses that just popped up. You're going to have something similar happen again, and they're all going to become big names super fast, unnaturally quickly. A bit like how Facebook blew up suddenly and became suddenly such a big thing. They're going to sort of scale up, our ChatGPT. They've got ever better at exponentially taking something from zero to massive, to global, transnationally relevant. And what they're going to do is they're going to create an absolute necessity for something, and these will be the only businesses that will supply them. In the current world, if you need a pick or a shovel, you go to the local home base and you buy it, or but they're suddenly going to create a need for a tool that you've never known to need before, and then there will suddenly be these businesses that will be the only ones providing it, and they'll give you an A and B just so that you don't think it's a new world order, like you have an Apple or a Google phone or Android. But in essence, you're just being given, okay, choose red or blue. Are you a Liverpool fan or a Man United fan? Either way, you're distracted by sport ball. In the same way, you're going to get 2 brands that'll be launched, supposedly competing, but are absolutely offering the online custody solution, and you're going to have to use 1 or 2 with the government. The government will say, here they are, and you're going to need to do this, and your ID and your health certificate will have to be kept there. You're going to have wallets suddenly exploding in mainstream, that people that have just been watching Bitcoin from afar and haven't really got engaged are suddenly all going to be getting smart in the next 18 months. And it's going to be forced as a result of the collapse. So the collapsing system, we've been given an option to jump off the dying donkey 3 times already onto the flashy, white, fresh new pony. And now what's going to happen is they're going to shoot the donkey through the freaking head. And everybody who thinks they're going to stay on the donkey, we're going to go crashing to the ground, and you're going to be forced to run after the white horse. And instead of being an early adopter or being somewhere in the middle, you're going to be a laggard trying to find out, and you're going to get the worst deals, and you're going to get punished for being stupid.
This is the wealth gap.
That's it. And that's why there's, I mean, you have to look at the take up in Nigeria and crypto and all of this. You know, people think, you know, places in Africa don't know about it. They have mobile phones, and they will have wallets, and they'll understand how to use them. They may not have a matric at a normal school in terms of education, but you'll be sure as hell the New World Order system will ensure that they all have an adequate. I was even talking to a friend that's saying there's going to be a gap for a real low budget smartphone that just has a camera on it, just sufficient for an ARP code and all the various things, and that does a little bit of surveillance, and it'll be a mini brick, and it'll be cheap, and it'll be made by maybe Microsoft or Nokia. It could even be a Nokia, because some are still on the old world, you know, phones that aren't smartphones. Everyone will have a smartphone. It'll then be, and there's going to be this Volkswagen smartphone entry category, which will be filled, and they'll all have to have it. And, you know, they'll even be given finance, even if they're uncreditworthy, to have it. So, you know how amazingly immediately a product comes and, hey, payment options are available. And it becomes the most important thing you absolutely have to have, because otherwise you can't manage your banking, you can't be paid, you can't do anything. So if you make it the system, we're canceling cash, and there'll be a stage of cash cancellation. It won't be entirely gone, but they'll be phasing it out, and you very quickly won't be able to be paid cash anymore.
Supply and demand.
You're a manual laborer.
Yeah.
Well,
they're going to create the demand for it.
Yeah.
So what about utility? Do you think utility for these blockchain technology protocols, digital assets, do you think utility is going to play a role in bringing more money into the crypto market this bull run? Do you think
I think all money is going to become the crypto market, but unfortunately it's also going to include those central bank CBDCs.
I once said that in time, XRP and XLM were going to mirror and even synchronize their movements, that were going to shape the market dynamics in unison. The reason I said this is because they are vital players in the emerging financial system. And I understand the true nature of these two technologies. We've done too much research on this stuff, and I appreciate the technical analysis. But I am a firm believer that it's going to be market forces that are eventually going to drive these two. So I want your unfiltered perspective on the true nature of XRP and XLM in the evolving monetary system. Do you believe that these two technologies are going to be really the foundation of what's yet to come? You could even look at their charts. They do move in unison to some degree. There is something very interesting happening over there.
Absolutely. So we have we actually have a high-ranking executive from XRP in our community, and we gave him some time, and I can't name him, but in the know, very well in the know, and he was saying in terms of how he sees it pan out, and he's been privy to conversations. He was saying that it'll almost be Coca-Cola and Pepsi. XLM and XRP. In other words, they're going to be fulfilling the same function, sugary water with caffeine, and in the same way, utility in terms of central banks. And he mentioned that one or two of the Middle Eastern players, some that were committed potentially to the one, automatically said that other of the nation states that are typically a little bit adverse would go with the other one. So it's almost going to be like you choose rum and Coke with Coca-Cola, and I go, okay, I will have, you know, cane spirits with Pepsi Cola. But we're both actually drinking alcohol pretty much similar, and with our sugary water. And so he's saying that they will be. The Jeb McCaleb connection obviously is quite obvious. And he also mentioned that he thinks this, even as an XRP person, he thinks that the generation at XLM is slightly more modern, slightly more advanced, but that they both achieve the same thing. And he thinks it's got a couple of features. But by the way, for those that rush off and say, that's it, I'm dumping XRP, I'm buying XLM, let me just say, technically, The one I'm taking personally is as a result of the chart, and XRP is a tiny bit more ahead. You can see they're very, very similar mirroring, but it is a tiny bit more ahead. And how have I deduced that? Well, I'm very technical. So I look at what the money is showing, the insider money. So I just want to be in the trades that the insider money is. Most of what I'm doing with HVF method is being a forensic detective on insiders. That's my job. What are the cheats that are not playing fair doing? And if I can spot it, then I can get in organically without having any insider information per se and highlight that. So if we just go over the last two highs and I throw a fib, these are real messy charts here. So I've done a lot of work on them. Let me just take those other lines off. You can see that XRP they're both in the blood basement, as I call it. That's the red zone on this Fibbo from its last high, because they had such huge spikes. They are still hanging fairly low. So in terms of the bull run so far, they've not made anybody unbelievably rich yet.
Even the last bull run, there was pressure building up. It really didn't do much, right?
Correct. And that's the benefit actually this time. Funnily enough, that turns into a benefit on the new time, because in all the other tokens, this was Bitcoin 69 while that was Bitcoin 20. That was 20K Bitcoin, and that is 69. And this is what Bitcoin, while of course on XRP, because of the headwinds with the legal case and the other rubbish, it's actually a lower high. And that technically makes it a stronger setup for when it does break. So it's going to get a bull run and a half, because it didn't get the other half of its last bull run, if that makes sense. There's going to be inherent catch-up in it where it's going to be perceived, and that's why we are super excited about it. And as we're saying, XLM is in a similar state, because I've chosen the wrong XLM version. It hasn't got a long enough list. Who had XLM really early? Because I've not got the original Impulse. Which of the exchanges always had XLM? Any of you? Let me know.
Coinbase had XLM for a very long time. KuCoin as well.
Yeah, so let me try because Binance didn't list it until after its first bull market. So we're looking for Coinbase. There we go. Let me choose that. So let's
and you
see
still hold your same price predictions for
no
XRP.
change at all. No change at all. So also to be clear, we haven't had our third impulse. So the price prediction is not an accurate thing to a sense.
Sure.
We're waiting for the third impulse. So I'm going to give up on that. I'll get XLM separately. Let's just do one properly. Let's do XRP properly and reduce some of the clutter here. So we don't know how high. We just know we only qualify a third impulse when we get to a certain percentage. And we want to see it get to around 112 and a half, $1.12. Then we've got an accepted third high. Any sell-off, then you should just be accumulating into that dip like no tomorrow. This is quite a low volatility period where it's been base building and has been doing for quite an extended period. And as I say, 112, once we get to $1.12 and a half and we come off, then we feel that you're in the GOM zone. And by the way, you were talking about timing and all of this. We've actually looked at this technically. When likely is this to run, which is quite interesting, because we all feel that 2024 at some point, it may not be January, it may not be Q1, but at some point it's coming. And typically the third impulse, the one we want, is shorter and quicker to happen, and then you're very close to the break. So that could be it there, and then you could break there. And what we consider it a break once you've taken out that third high, and we'd say you can put your stop on that low there. So we're waiting for that. That can happen pretty quick.
Right.
I've drawn it on quite a big time frame, so it looks like it's only breaking a lot later, but that can happen pretty quick, or it could extend for a while, and we could have a lot of drama in the world and debt failing and a major lengthy demand destroying event, which could prolong it. So that's why I say I think there's unfortunately still a twist of the knife to come before you're going to get all your Christmases come. And you've got to try stay in that game.
And your price prediction from when we last spoke, Francis, was
1677. Yeah.
Okay.
So that's, I'll go back to log scale just to illustrate that, because it's a macro setup. And let's just do that and pull it through.
And this is purely based on the technical analysis, correct?
Yes, it's
For the most
HVF
part.
method, the Hunt volatility funnel method, projection of and I'm going to make some of the lines go because there's a lot of work in there and it's messy and it's probably just confusing people, but that's the squeeze. And we love trading the squeeze, and the fact that it didn't get a higher high here is more bullish for when it does break.
It's
So
like
it'll
more
go
pressure.
higher for longer. Correct. This is the ping pong ball, you know, you hold and you trap it under the bat. That is literally it. And then that is that pressure, that inertia that you feel collecting up. So we want a nice little bump and then some degree of pullback, and then we can go. So what month I've done in this, and we've even done high to high, low to low type projections, and we've compared it to other setups that we've had. You know, where's the three? The three is going to be somewhere here, the second low to the third low. And we've been trying to forecast. I don't think it's in the first quarter, actually. I think it's more likely to be mid-year and second half of the year. That doesn't mean it's not going to be a good first half of the year. It can be drifting up. You're going to enjoy going to $101.12. It's not going to be like painful, is it? It's not bad news. And generally, you're going to be higher and better, I think, on the whole. But the breakout, the point of breakout where it goes insane, you know, these moves, when's that? Everybody wants to know when's the big money. They're not so interested. You're going up here, but they're not so interested about that. They want to know when's this candle, you know, and that's why I say you're probably going to be pretty good, excellent, you know. So I think we're in a good space here for this, and XLM is very, very similar.
Can I ask you a question, Francis? You don't have to disclose this, by the way, if you don't want to, but are there any other cryptos that you're participating in that
besides Caspa
that might have utility? Because personally, Versan and I have maybe several or 10 that have skin in the game, but we don't really share that too much publicly because we don't want to encourage people to take too much risk. They lose something, they have poor risk management, and they come back and say, you asshole, you got me into this and that, you know. But yeah, we have probably 10 to 15 different cryptos with huge positions in, to be honest. Our top ones, of course, are XRP, XLM, XDC, HBAR. But then we have several others, and we know they're going to do very well this bull run.
I have one, unfortunately, I can't disclose, that is sufficiently liquid and is going to, in my opinion, do where I see a 33x before you get a major pullback here. This one, I see a 60x. It's in our community, and we've kind of made it a private call. But I will give you something positive on a token, and that we can discuss, and that's one you've just mentioned here. And this is a little bit of a sneak peek of community work. So you're getting something ahead of anyone else privately. We have been watching HBAR, and this little structure has come under interest to us over here. So you can see on a big time frame, it's quite a new token. You haven't got that many bull markets, but we're watching that. And when we take you into that, get off the fortnightly chart and into the daily, we do think there's a scope for a bit of a nice pop and run coming for HBAR.
In the bull run, right?
To the upside, yes.
What price predictions do you have?
Yes, so it's this. We're watching that. And that is a technical structure we like a great deal. I would actually like it to come off a little bit more. It may not. It might be at a choppy phase where it could come off a bit because it was a bit volatile, and I don't like that. It's usually good for a down leg, and actually I would like it to have a down leg, because if it did something like this, we'll be wailing in over there and then putting a stop under there, and that would be quite a substantial move. And I have done figurative targets. We don't have our full target until let me just take the fib off, because that's just go away. There we go. and all the pink lines. So for us, we're watching this a fair bit. And I would see this doing quite a substantial move. Give you a guideline on targets, I would say in and around, let me just get the magnet on there. We're having to guess because we haven't had the third impulse complete, but we can have a good approximate guess. So an approximation, we get to finalize that number. I would say 14.6, where it is currently at the moment 0.06. So it's about 6.2 cents. We're seeing 14. But the key thing about this, that's not a blowout. Wow, it's not going to make you rich. But the key thing about this particular structure being the first in a new trend, it's actually likely to substantially overperform. So the very first in setups in a new trend, the targets are mainly resting places. It often goes substantially further. It's often the first in, in a long run. And I can show you, we called similar on Sol in the previous cycle, and I can show you how much further it went. So it targets when you're dealing with a first in a new trend. We have a different methodology where we, instead of closing it, we hold on to it, and we have a different exit strategy. So over here, for example, there was an upside HVF in Sol. This is a very big time frame for Sol, because I'm trying to show you. And there was another one, and that was the target, but you could see it went to $260. So if I just make that regular and reframe that, you can see what a big move that was. So you had two opportunities to get in here. Both of these were early. That was on a lower time frame, and this was on a bigger time frame. But you were getting in here, and you were running all the way there. You got another setup there that gave you the 259 as your top, and then it literally didn't trade a full dollar higher than that, and then it was bear market all the way down.
I think this next bull run is going to be, a lot of these cryptos are going to surpass their all-time highs previously.
Yeah.
Most likely.
And this is not an endorsement of Sol, though. Some people
Sure.
come, why are you putting Sol? ADA's better, and they'll say something fundamental. These are venture capital, and this is probably statism. They were garbage. They failed countless times. Their network's been down a lot of times. I know all this. That's not an endorsement. I'm just saying this is technical. It's totally agnostic. If the criminals have decided this is the one they're using, and they're going to keep getting it wrong until they eventually get it right, there's nothing you can do about it. If they're going to throw a wall of money way bigger than you can even count to 1 trillion, then, it's going to win. It doesn't matter if it's a donkey. I used to have a joke, in South Africa, we have a guy called Van der Merwe, and we used to say, Van der Merwe is so stupid, he took a duck to the cockfighting. And then the mafia at the cockfighting, they bet on it. And then the answer, the duck won. If these guys choose to bet on a duck in the cockfighting, it's going to win somehow. It's going to win.
Funny.
So it doesn't, it doesn't matter really what the narrative is. They've decided that's their vehicle. It's the Betamax versus VHS. The movies were VHS. Forget it. Betamax better record it. Doesn't care. People want to watch the movie. That's it's just a tool for watching the movie. It doesn't matter. That tool won. It doesn't matter who's better. Everyone sees a meritocracy. This is a big mistake. There is no meritocracy at the very top. Corporate malfeasance determines success. It is corruption. If you've paid and bunged all the right people and they all stand to make much more money, that item wins. There is no true meritocracy on which one functionally is better. The one that has to win will win. And that's determined by the most people inside the power circle that will make the most money and have the most power and control. If you're delivering that, that's all that matters.
That's true.
Everyone thinks, that's a better football team to that. It doesn't matter. In this game, it's not about merit. It's about corruption.
Well, Francis, I think these were amazing charts, and the insight you gave us was incredible. I think we're going to have to wrap it up, but before we do, what are your any last words that you want to share with people watching, and any advice, any tips?
100%. So you need a protocol and a code for your existence to make sense out of what is a very confusing, very inverted world. You've got the inversion, perversion of the transgender movement. You've got this central banking Zionism that is perpetuating projects that shouldn't win to win. You've got to just build the wealth you can and be pragmatic. And you yourself have got to determine yourself to be a person of principle in your dealings with everyone else. So if you live a life as a person of principle, you'll be well remembered. You'll actually have a successful life, because actually when I want something done, I turn to the guy I know I can trust, and you will become successful in spite of all these negative, corrupt forces that are working against you. And believe you that me, there are many. So determine what's going up by the best means. Go ahead and invest in that, and recognize that some of these things may be corrupt. Don't invest in them, their mindset and their game. Recognize that you have to be de-digitized to survive what is going to be a digitized prison, surveillance finance prison. Right. You must get the best quality of your life for the years that you have and for your children. And by doing that, you must love, dance, be merry, be happy. I'm not a nihilist, a narcissist, or anything of those things. I'm actually have a great life and enjoying it. I'm calling the game. I'm seeing the game for what I assess it to be, on facts, on rationale, not on emotive reactions. I intend to participate in the places. I am not a man of principle towards malfeasant corporates. I think you should pay as little tax as possible. I am a man of principle to individuals that show principle. And I start assuming that everybody is that with everything until they prove to me otherwise. So when you do that, the world becomes simpler. You just go refer to your code and be who you are according to the code that you've determined for yourself. Mental psyops are going to come at you fast and furious. And the way you cope with them is you recognize in advance that's happening. You don't deny them. I deal with so many people that think, no, Trump's going to save them. This is going to save them. There's going to be, God is going to come out of the sky on a chariot and change it. No one came during the Bolshevik Revolution and saved 20 to 60 million people. No one came during the Armenian Revolution and saved all those that got shot. No one came for all those that trusted government and took the science and now have turbo cancers and have died. And we won't mention what we're talking about there. No one came. You are your own God in your mindset and your mind's eye. You have to be awake and alert, because you're protecting not just yourself, the people you influence and affect. And you should aim to have a positive effect and be a principled person. If you can establish that and do the damnedest you can within your own sphere of influence and the people you interact, you've done an amazing job. You're going to live a proud and amazing life. And even if you die a day or two earlier than someone who sold his soul, believe you me, they're living in suffrage. You're not missing anything by being any of those that have crossed to the other side. I've got a community of people that have that as a philosophy. We trade HVF method, which is don't believe what they say, have a look at the charts and what they do, and apply the natural laws of geometry, price movement. As much as things panic to the downside, with the same amount of leverage, they panic to an equivalent degree to the upside. That allows us to have targets, really tight stops in low volatility moments, so that we can maximize wealth building in reset times. All the traditional financial information is almost certainly wrong and should literally be inverted, that you will get from a financial advisor who will sell you a pension which invests in debt instruments. You should remove all debt instruments as investment classes, and you should be prepared for an interest rate spike and being self-sovereign and self-reliant. That is the key focus. That's our core focus and principles. We have a community of that. If you'd like to join, follow the YouTube first of all, book a call, talk to a non-salesman or someone who's in there, and see what we're all about. And thank you for having me on. And you guys are doing God's work too, right here, right now. For giving me an opportunity to talk. Thank you. I overdid it a bit, interrupting you. I apologize for that.
We love it when you talk, Francis.
It's all good, man. Don't worry about it.
I was a bit bouncy tigers today.
You're a wealth of knowledge.
But you're doing God's work and keep doing it. And you are honorable, good, souled people. And keep protecting and keep calling out the lies, keep being accurate, and keep helping people to build wealth, and give your best guidance. And you are teachers amongst men. And teaching is a noble art. It's a noble art. We're all teachers. This notion of teachers from school and all of that. We're all learning. We're all students, and we're all teachers. And it truly is. Do your best to learn and grow, and pass on the best knowledge when you're confident of it.
Amen to that, brother. And of course, always good chatting with you, Francis. We love having you on, man. This is like perfect. Eventually, we're going to meet in person. Eventually, I look forward to that at some point. But until then, thank you, everybody, for watching. And thank you, brother Francis. We'll chat soon.